Welcome back to Yahoo Finance. I'm joined here by the president and co-founder of Premier Lacrosse League, Paul Rabil. Excellent to have you on here. Of course, want to talk about this. Obviously, you're an athlete. That's the background that you come from. Talk about some of the key ways you've seen that translate into business.
Such a great place to start. I would say work ethic jumps out to me. Athletes have supreme work ethic and discipline around their work ethic. On top of that is consistent work ethic that's regimented. So those are all characteristics I've learned in the workplace over time differentiate great executives from good executives. I think the element in team sports, although let me back up, even individual sports a lot of times have teams, whether it's your strength conditioning, physios, nutritionists, coaches. In sports, you learn how to be a great teammate, and that the sum of all parts are far greater than how big any or great any individual can become. And those lessons, I think, translate really well into the workplace. Where the challenges often happen, I see, is that when you become an executive, the outcomes are less judged in the binary. In sport, it's you win or lose. And you have to be the hardest worker in the room. And all of these like sport isms. In business, I found, and in life, and even in romance, about compromise. And so can you maintain your competitiveness and offer a level of compromise? Because the deal that we get done, I'm going to give some, you're going to give some, and we're going to be better. You don't do that in sport.
Sure.
So that's like some of the stuff I've learned over time.
What prompted you to start the league, and what's the state of what you do right now?
Well, lacrosse found me when I was 12 years old. My neighbor gave me his backup stick. I went out for the rec team. I otherwise wouldn't have been able to afford it, because I just played rec sports growing up. And it's an equipment-based sports like golf and hockey. And what a lot of people talk about is American football. The difference is football in the 60s went the public funding route, so we could all get our equipment for free and play Pee Wee football all the way up through. You know, sport is the ultimate equalizer so long as that access is equal. And I learned that as I sort of accelerated through the ranks, because I fell in love with this beautiful game, learned that it is the first game in North America. It's the indigenous game. It was once in the Olympics in 1904 and 1908. It was one of the first college games played. And then along the way, something happened. Football, basketball, baseball, hockey in America took off, and lacrosse sort of dwindled at the pro level. So as I entered the pro game, which was called at the time Major League Lacrosse in 2008, I had a Facebook page, I had a $6,000 wage as a rookie, and I had a bunch of ideas. And most of those ideas were unlocked through what we talk about here in Cannes, which is advertising, integrated marketing, creativity, and knowledge. And throughout my first 10 years of playing pro, I was sort of scratching my head going like, man, the rise of MLS and UFC, non-core 4 sports, are adapting to new media, new technology, the ability to go direct to consumer, and we aren't. So at some point the rubber meets the road, and that was me and my brother coming together and raising venture capital, convincing all of my teammates and competitors to come along with us, and we started the PLL under a relatively new age vision of pro sports.
And so when you look at how athletes have changed in terms of how they build wealth, back in the day it used to be, car washes or whatever it was, seems to be, they all seem to gravitate to the same sort of investments. But this is a very different time now.
Yeah.
Individuals as brands. How much has that changed? And even in terms of the players who are in your league as well?
Well, a lot has changed, to your point. So players are getting paid like owners these days. I see players get paid, $200-300 million contracts over 5 years, which is astronomical compared to when the NFL was taking off in the 60s and 70s during the turn of the television era. When we launched the PLL, no, we don't pay our guys $10 million to play like the NBA. But what we did think about is, what if the players in the NFL of the 60s had equity in those teams? Would they be very pleased or differently pleased with their successors in the NFL today? The answer would probably be yes. So we offer our players full-time wages, health care, and stock options. And so I'm thinking just through, to answer your question, through the lens of where I see the trend of sport going, and at least through our lens, our players are building economic and financial security and long-term wealth as we continue to grow the league. And I think players across disciplines look at, a balance between cash in form of compensation through partners versus equity. They have to make decisions, this is where financial literacy comes in, around stage, right? So we just saw the PGA Tour announce that they're going to give some of their golfers equity, but they raised at a $2 or $3 billion valuation. So you have to look at the equity I'm getting at this post-money valuation, how much can it go up? The Washington Commanders, they were just sold for $6 billion. So David Blitzer and Josh Harris are looking, can we make this $6 billion worth 10? And that's not even a 2x. So we often hear about stock and equity and these unicorn valuations and people get in a 13 to 40x return. That's really when you're early stage. So that's how I think about and how we talk with our players about equity in today's climate. Now I think athletes are going to continue to invest in a wide range of sectors. We advise our players, and I talk to other athletes, to think about diversification of their portfolio. But in the end, invest in mutual funds. Long-term investment is your ally, short-term investments are your enemy. And then, hopefully you surround yourself with a good financial advisor, a good wealth management team. But these guys and these girls in pro sports can do a lot of good if they allocate their capital well.
And we talk to a lot of co-founders now of public companies, but it's rare that we talk to co-founders of sports leagues.
Yeah.
One, are you out there still raising capital? What's your future outlook for your business? Do you see yourself selling it to an Amazon or a Netflix so they can put it all over the TV? I mean, how do you think about the long-term vision for what you do?
It's a great question. So when we raised capital in 2018, we were very aware of the last 20 years of emerging sports leagues. There's been roughly 200 since 1990 that have started with a 1% success rate, and that's designated by your ability to sustain beyond 3 years of play. Think about all the leagues that have started, maybe had a first year, second year, and then they turn over. Think about spring football and of that nature. So we knew we had to raise long-term capital and not rush to launch. So I think that's important, and we've done a great job with investors like Joe Tai, to Arctos, CAA, Rain, the Chernin Group. So just really astounding sports investors who are value accretive to our business and our operation, but are also long-term betting on lacrosse. When we think about the future of where we're going to go, we're sort of in a unique place because we're a team sports league that's wholly owned. So we own the league, all 8 teams. We work with our players on marketing deals. So it's fully turnkey, which is important to advertisers. And it's really nice for our investors on our cap table. The exit...
I left out IPO too. So, I figured I'd toss that up for you.
Is 3 ways, right?
Yeah.
So that's one.
Yeah.
Another is you find a strategic buyer at 51% or more, or you can build into that like Endeavor did with the UFC. And you mentioned new media as potential groups. You also think about like the Liberties of the world that own F1 and TKO I had mentioned, and even Aries. And there's more institutional capital looking to get into sports than ever before, which we can talk about. Then the third path is probably the more likely or the more customary that you see in team sports, which is sell teams, which yields a return on a per team basis in the form of franchisees to the owners of the business.
So I do want to ask, because you raised an interesting point about where things are going. When you look at sort of global expansion for some of these things, how close is that to your plans at the moment?
It's a big part of it. So lacrosse just got back into the Olympics, which is something that we had been working on over the last, really as a sport, 10 to 20 years. I had mentioned we were once in it in 1904 and 1908. The impact you get in the Olympics, just to put it in perspective, is 3 billion people on average watch it, which is the equivalent of 30 Super Bowls. And lacrosse has never had that level of exposure. So that pursuit of organizing, right now there are 92 countries that compete. There's going to be over 100 in the next year and beyond as we approach 2028 in LA. That unlock is really big. And it's incumbent on the league now to continue to grow commercially, help participation grow internationally, much like David Stern did in the 80s when he went to Asia Pacific, much like Roger Goodell is working on in the NFL, now in Germany, but in the UK and Mexico. But we have an approach where we want to invest because we know the challenges to emerge and grow in the US from a cost standpoint, from an education and coaching standpoint. So we've been to Japan, been to Australia. We're looking at the rest of Europe and Asia Pacific to I want to say slowly but surely, but very meticulously grow and help the international game grow.
Before I let you go, you did a great panel with Rachelle on financial literacy. I loved it, and I think
She was the best.
She,
It's really hard to moderate.
she's awesome. She's
and
awesome.
We had a short amount of time, and you nailed it.
It's an honor for me to be sitting next to
That's
Rachelle.
fabulous.
But I think you made a very good point on whether it's athletes or the regular investor listening to the wrong people. Tell us, for those who didn't get that access to that panel, why is that so important, and how do you avoid not getting sucked in by someone promoting stocks or financial products on a TikTok?
Yeah, so listening to the right people, it's really everything. Going back to your first question, which might help us tie a bow on this, is team. And my advice to athletes, having learned it the hard way and figured it out over time, is take your time, interview several or more wealth advisors or groups. A lot of us are programmed not to, because sport is designed, whether it's locally, this is your high school, this is your coach. If you're fortunate enough to be recruited and have a choice, which most athletes don't, you get into a school, that's your coach. You're drafted by a team, that's your coach. So we're used to assignment. So we got to learn that the leverage then turns towards us as athletes to meet the right people, interview people, ask difficult questions, and then find references. Mm-hmm. And the best thing that we do as a hiring strategy is we reference references. Because as someone who's interviewing to take a job at Yahoo Finance, they're going to show their best self. And they're going to interview the best way, right? And they're going to show or give you references of people who will send them flowers. So you ask the reference for someone who also knows, and you go that way. So I would say be really thorough around who you're building a team around. And what I said at the panel I stick with today is we work with UBS on financial literacy for our players. We have an alumni program for our players to work with each other and find job opportunities when they're done playing. I'm a big fan of EverFi, which is an educational modular technology platform that works with schools that essentially metaphorically ties sports into financial literacy. But what I think about is time. It's our most valuable commodity, how we're using it, how we're thinking about our investments more long-term, as we talked about. I think about diversification. We've covered that. And I think about relationships, which is to your last question. And the statistic that I love that comes from Scott Galloway, who I think does a great job of articulating this, so I'll do my best to mirror it. But the most important decision we make in life is the person we choose to partner with. And from a financial well-being perspective, healthy relationships tend to accrue 77% greater net income than going at it alone, which counter to how we think about generating wealth. It's very much a solo exercise. It's not.
Certainly that importance of community. See that reflected also in Rabil Ventures, that having entrepreneurs also investing in each other as well.
Yeah.
Great having you on. Paul Rabil there, president and co-founder of Premier Lacrosse League. A pleasure having you here. And of course, an Olympic torch carrier.
Thank you all.
Pretty darn
and
cool.
It's so beautiful. Love what you do. Read
you.
it every day.
Appreciate
Thank
you.
you for having me. It's a pleasure being here.
We appreciate you so much.